Nigeria's rapidly growing digital lending sector is entering a new era of accountability and regulation. The Federal Competition and Consumer Protection Commission, FCCPC, has officially set Monday, January 5, 2026, as the final deadline for all digital lenders, including mobile loan apps, online credit platforms, and non-traditional lenders, to fully comply. Lenders must now fully comply with the digital, electronic, online, and non-traditional consumer lending regulations 2025. This development is a game changer for fintech in Nigeria, signaling the transition from a loosely regulated space to a formal, accountable ecosystem that prioritizes consumer protection, transparency, and fair lending practices. The regulations, which were initially issued in July 2025 under the Federal Competition and Consumer Protection Act 2018, FCCPA, cover all aspects of digital lending. Lenders are now required to provide clear disclosures, fair interest rates, and standardized loan terms. Platforms must also ensure that their collection practices are ethical, protecting borrowers from harassment or unauthorized deductions. For many operators who previously ran informal or lightly regulated lending apps, this represents a major operational shift. According to the FCCPC, all affected lenders, including third-party service providers, must submit the necessary registrations, forms, and operational documentation by January 5th. This includes completing Forms 1 and 3, providing full disclosure of lending terms, interest rates, and repayment structures. Failure to comply will attract strict enforcement actions, ranging from suspension of operations to fines, revocation of licenses, and termination of business partnerships. The implications are significant for multiple stakeholders. Borrowers will benefit from greater transparency, safer loan conditions, and clear legal recourse in case of disputes, helping to build trust in the digital credit ecosystem. Lenders and fintech operators face increased compliance costs, audits, and operational restructuring, but those who adapt quickly will gain a competitive edge and credibility in the market. Investors and partners now have a clearer understanding of which companies are fully compliant, helping guide funding and strategic decisions. For the fintech industry, the January deadline represents a strategic inflection point. Companies that embrace compliance early will likely dominate the post-deadline market, while those that resist or delay risk losing market share, customer trust, and even legal standing. Industry experts predict that we could see a consolidation of digital lenders, with only the most professional and transparent operators surviving long-term. In summary, the FCCPC's January 5, 2026 deadline is more than a compliance requirement. It's a turning point for Nigeria's digital lending ecosystem. The sector is moving toward greater legitimacy, consumer protection, and sustainable growth, and every lender, partner, and investor must adapt to these changes.